Hi, welcome to the market view for Friday the 27th of June 2014. Starting off with the 30-minute chart, we can see a couple of black dots on the chart which indicate losers, unfortunately, but that's just the way the market was yesterday. No direction until Carney spoke, and then the market moving higher, which we see from this point here. So starting on the left-hand side, we had a 13 pip loss in this trade as the market tried to move higher and then traded back through the DP level, only to find some buying coming into the market at 9 a.m. and then giving the buy signal, moving higher up until 10 a.m. there, and then at 11 a.m. an hour later the market hitting the target. But unfortunately Carney was speaking, and generally it's unwise to be in the market at this time. So of course the market could have gone the other way and dropped 100 pips, and then it would have been a completely different story. So as I said in yesterday's market view, to stay out during the statement from Carney. We can see there the market moving higher, but that's something that I would prefer to miss the trade than actually be subject to even greater losses. Then in the afternoon we had a signal at 1400, the market moving lower, and then filling the trade, the buying coming into the market. You can see a huge amount of buying coming in there at the previous day's high, so the market finding support, and then you see the next three bars there where there's further support, and then the market moving higher. This resulting in, unfortunately, another loss, and this is how this one would have looked. We've got the market just touching the signal there, the entry price, and then 50% above, which is what we do if we have the market going through the entry price, then coming back, and particularly on large buying, we have to consider getting out of the trade. And if you waited for another 2 or 3 bars and doing exactly the same, you can see there more or less the same result. So unfortunately another 20 pip maximum there, depending on where you got out, 16 to 20 pips, and then the market's just traded in a sideways range thereafter. Just one of those odd days where we had consecutive well, not necessarily consecutive losses, because we had the one in between with the news from Carney there, but of course that's discounted. So in effect, 2 consecutive small losses there for yesterday. I say there's not a lot we can do about that, and the market's trading in the sideways ranges at the moment make it difficult. I mean, the whole range yesterday was about 69 pips. In the daily chart, you can see this sideways range, and yesterday the market moving up, trading up to the 76% that we drew in yesterday at 170.38, and the high for yesterday was 70.38. So you can see how powerful the fibs are in actually predicting where the market is likely to find support and resistance. Market going through the 170.11, so we remove that, and the 170.25 also removed, and then the market stopping at the 170.38. The market also back below this now on the overnight session, as prices are struggling with the 170.50, which we spoke about in yesterday's market view. On the news front today, we've got German prelim CPI. This is out this morning. This is to show an increase from minus 0.1 to 0.2, and then the current account, which will be an interesting one to see at 9:30, minus 17 from previous of minus 22. So let's see if the government's borrowed more than the forecast there at 9:30. Moving on to the Dow, the implied volatility turning down yesterday, which is quite interesting because the market dropped 140 points just after the open, turned around and traded back, which we'll see in just a moment. The historic volatility is a very interesting picture because we're now back down towards the December and August lows of last year. This actually also turning down yesterday, and you will see there we're down to 9.21. The previous day was 9.49. So again, the implied volatility moving lower once again as the market finds support, which we'll just have a quick look at. So you can see the market opening, trading lower, and then coming all the way back during the afternoon session and the afternoon session for New York, evening session for the UK, to close on or near the highs, having it tested these areas to the left. So that picture prevailing, apart from one day this week where the market trading all the way down, but following that, in subsequent days, we've got the market opening, moving lower, trading back up to the high, opening, trading lower, moving back to the high. So the market again is being pulled back to the upside, and again, I'm still confident that we're going to head towards the 17,004 before this market turns around and goes south. And that's about it this morning. Short, brief, and to the point. All things being equal, I will see you in Monday's Market View. Have a great weekend. Hopefully the rain will clear off that we've currently got this morning as I look out of the window. Have, a pleasant weekend. As ever, thank you for your support. It's very much appreciated, especially during these times where the market is incredibly quiet, sideways, not moving at all, but it does bode well for the future because low volatility does equal some great moves down the line. It's just a matter of being patient and waiting for that. There's nothing I can do to speed that up, unfortunately. If I could, then I would, but we have to go with what the market throws at us, and that's what we're currently experiencing, which as I've said before, is rather unique at the moment. So you're watching something unfold before your eyes, which has never happened before, and certainly an unprecedented situation. Okay, that's it. Thanks for watching. See you on Monday.